It's very hard to say what the timing of that will be. When will these bottlenecks disappear? Prices have come way down, but they're still pretty high.
Pure underlying demand supply fundamentals are putting commodity prices to the levels where they are.
The penetration of vaccines around the world is going to take time, and it has a meaningful impact on intercontinental traffic.
Business travel will certainly come back because businessmen, they like to face people, they like to feel people, they like to have to notice the body language.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the Early Edition on this Wednesday, the 23rd of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. China can't fight the law of supply and demand. We'll bring you an exclusive interview with the Glencore chief executive, Ivan Glasenberg, as the commodities market continues to surge. And on the 5th anniversary of the Brexit vote, the UK and the EU are close to reaching a truce in their post-Brexit trade dispute. So quite a lot going on today, actually, but we start with our top market story. Jay Powell saying that while a debate on tapering may be in the cards, the Fed is nowhere near raising rates. Now, testifying before a House committee, the chair also admitted that price spikes have been bigger than expected, but reiterated that his view that inflationary pressure will abate.
We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. A pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy. I will say that these effects have been larger than we expected. And they may turn out to be more persistent than we've expected. But the incoming data are very much consistent with the view that these are factors that will wane over time.
Well, let's get more now with our Danny Berger. You can also catch Danny also at 5 a.m. London time going through the markets. So, Danny, first of all, what was the reaction from the markets on Powell's testimony? We didn't really learn anything we didn't know.
Yeah, exactly. And I mean, both at 5 a.m. this morning and now, it's almost like we didn't even need to be awake during the past week. We have had a round trip here. We're looking at a U.S. 10-year yield that's around that pivot point of 147, which is really where we started before that FOMC reaction. I mean, all this turmoil in the middle, hearing from Powell that more dovish tone, which we also knew he would take because of his prepared remarks, really soothed markets, be it in the 10-year or even equities when you saw the NASDAQ hit a new record. Tom Porcelli, though, over at RBC, saying that his testimony was really political. Tom clearly wasn't impressed, saying that that's an hour of his life he'll never get back. I mean, being really, really harsh here. But he did point to what Loretta Mester said yesterday as one of the more important things we heard from a Fed speak, saying that non-conventional monetary policy has the potential to increase risk to financial instability rather. So kind of flagging that, hey, there are distortions that can be caused by what we're doing over here. So the question arising, maybe the Fed is also trying to talk some of the froth off the market.
Yeah, I always like snarky remarks, Danny, but I also always have time for Jay Powell. Away from the Fed, Bitcoin been whipsawed in the past 2 sessions.
Yeah, definitely. I mean, if we're talking about froth, maybe that is necessary. We talk about Bitcoin. Yesterday, falling 10% from the open and then rallying 10% again. That's actually the 5th time this year that has happened. It is a more volatile year when it comes to Bitcoin. That happened 2 times last year, 3 times in 2018. So this really isn't necessarily the norm, even though we know it's really volatile. This may have started with China, but this is a very momentum-driven asset. So if they're selling, people tend to sell into it. If there's a price rise, people tend to buy into it. At the moment, we're back above $34,000, but it just goes to show that we can expect a lot of volatility this year when it comes to the crypto space.
Danny, thanks so much, Danny Berger there. And of course, we saw maybe that next support at 20,000. Now, coming up, Ivan Glasenberg gives us his views on China's efforts to cool the commodities market. We hear exclusively from our interview, the Glencore chief executive at the Qatar Economic Forum. This is Bloomberg. economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the head of the world's biggest commodity trader, Glencore, says Beijing efforts to cool commodity markets just won't last long. Ivan Glassenberg, who's headed the miner for 7 years now, spoke to me exclusively as part of the Qatar Economic Forum. Now, after an almost 40-year career at Glencore, he rose from a coal trader to chief executive. Glassenberg now plans to step down from that role at the end of June. So in what may be one of his last interviews in the chief executive role, we delved into the reasons behind the recent run-up in commodity prices.
Got the big infrastructure spend, which is occurring in China at the moment. It started early when the COVID crisis hit and the Chinese got out of the problems. They started spending on infrastructure and pushing the infrastructure fiscal spending, and that started the rise of commodity prices. You also had a few disruptions around the world in certain commodities because of the COVID, and that tightened up supply, and that allowed the commodities to push up to where they are today. You also have infrastructure in picking up in various parts of the world, but we do see it coming in the United States when eventually they pass the infrastructure bill, and the speculation of commodity prices picking up on the back of that will start driving them up. So I think the pure underlying demand supply fundamentals are putting commodity prices to the levels where they are. I know recently the Chinese have tried to push it down to bring it back to lower levels. I think that's a short-term game because the underlying fundamentals will keep it at these levels.
So how much can they actually try and talk it down, China?
Well, they're not trying to talk it down. They're taking some material from the strategic stockpiles and putting that in the market. Now, how big the stockpiles are, we don't know exactly, but they can do it for a while. But eventually, they got to restock the strategic stockpile. They can't keep it at these low levels, so they'll come back into the market. So I think it's a short-term phase.
Short-term, like a couple of months? Are we actually at the start of some kind of super cycle, but a super cycle that's very different from last time around?
Yeah, well, what was long? We've had two sort of super cycles, you can say. In 2002, we had the Chinese coming into the market where you had the big push on commodities. The world wasn't ready for that amount of demand, and you had commodity prices rise considerably. Then the world sort of caught up a bit, but then you had the 2008 financial crisis, pushed down commodity prices. Chinese came in big with infrastructure spend in 2009. That kept it strong. Unfortunately, then the mining industry got the usual situation where they started producing too much, increased production, opened up new mines, and started producing more. That pushed it down, and you had the 2015 commodity price drop. Now it started looking better until COVID. COVID pushed it down, as we said, and now we got the rise with the infrastructure spending occurring in many places around the world. Is this a super cycle? I don't know if you want to call it a super cycle, but I do believe commodity prices will stay strong for a long while longer. And I think when the American infrastructure plan comes into fruition and the actual shovel-ready, how many shovel-ready projects they have, I don't know, but let's assume it will take them 18 months to get going. You will push a commodity price will stay high for a long time. You will have both parts of the world pushing infrastructure. You'll have the Chinese continuing with their infrastructure plan. They still got to urbanize a few 100 million people, and you have United States kicking in, upgrading their infrastructure. Demand for commodities will stay for a long time. Can supply meet that demand? Well, that's another debate. How quick the mining industry can increase and bring new projects on, but that's a lengthy debate. New projects, I think, are going to take longer this time around. There aren't many projects around the world. We've developed most of the easy projects. We now got to go into the more difficult regions of the world where there isn't infrastructure, harder political environment, and I think the mining industry is not ready to add massive new tons to the market. But with the new green energy, besides the infrastructure and all the green energy demand that we'll talk about later, I believe the mining industry is going to struggle to keep pace.
So, Ivan, is a surge, for example, in coal prices, which currently are at around a 10-year high, a warning sign what could happen, for example, in oil and gas with the energy transition now that companies just aren't investing enough, which goes to what you're saying?
Yeah, that's clearly. You've seen, I think, thermal coal is leading, is a perfect example. The world has said we want to reduce the amount of thermal coal production. Mining companies definitely are not investing in more thermal coal mines. A lot of the mining companies are even getting rid of their thermal coal mines. We ourselves, we said we will run down our thermal coal mines over time, and we said we will follow the Paris Agreement, whereby we'll reduce by 2035. We're talking about 40% there, and by 2050, we will run down most of our coal mines. So what you are having is supply being disrupted, no new supply coming into the thermal coal market. However, demand is still there. Now we can talk about the green energy and how we're going to switch from fossil fuels to renewables and how quick we can do that. But right now there are coal-fired stations around the world, especially in Asia, which continue. There are still new coal-fired stations being built around the world, as much as we don't want that to happen. But the developing countries, coal is still the cheapest form of energy, electricity supply, and these coal-fired stations will continue. But if you are cutting supply and seaborne market is about 950 million tons, and you reduce that, and that continues reducing, you will have coal at these high levels. And today you have Australian coal at $130, South African coal at $120. That's what happens when you cut supply and you haven't found a solution for demand. I think in your previous panel, I was listening there, that's the situation. Cut fossil fuels, that's fine, but we've got to make sure renewables can fill that space and we don't have a gap. And if a gap is going to be there, you're going to have higher commodity prices.
Well, that was part of my conversation with the Glencore Chief Executive, Ivan Glassenberg, at the Qatar Economic Forum. Now, stay tuned. Up next, Ivan and I discuss the mining industry's role in the green transition and how the move to renewable energy is also likely to disrupt the market. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the mining industry is responsible for up to 7% of greenhouse gas emissions globally. While nations push to lower their emissions, a switch to renewable energy will actually require vast amounts of metals. Iron for steel, copper for wiring, and cobalt for electric vehicles will be crucial to reach net zero targets. But how does the mining industry up production while lowering its carbon footprint? Well, Ivan Glassenberg and I discussed the tough road to green energy at the Qatar Economic Forum.
The energy transition, we today we got to substitute fossil fuels, whether we're talking about coal, oil, gas, and we've got to reduce that by the year 2050. And we're talking about replacing that supplies 80% of the world's energy demand today. So, if you've got to do that, we still got to grow the amount of energy. By 2050, you've got to produce 2.5 times more energy the world's going to need. You still have about 800 million people in the world who still don't have electricity. We've got to supply them electricity. You still have about 2.6 billion people in the world that still don't have clean cooking. So a lot of new energy has to be supplied to the world. Now, if we're going to take that renewable, today the world produces around about 3,000 gigawatts of renewable energy. We got to take that up by the year 2050 to 26,500 gigawatts of energy, renewable. What does that mean? We got to produce 20 times the amount of solar energy than we're producing today, 11 times the amount of wind turbines, and we talk about electric vehicles. We say we want to produce by the year 2030 to follow this energy transition, around about 55 million vehicles per year being produced. Today, that's 18 times the amount of electric vehicles we're producing.
But Ivan, are you telling me that that's almost impossible that we achieve those targets, or you're saying, we can achieve them if we do this today, but it will be difficult?
I don't know if we can achieve them. Can we switch over to that amount of wind and solar in that amount of time? I don't know. But let's assume we can, and we can fill the gap of fossil fuels with this wind and solar. The question is, do we have the metals to supply it? To give you an example, copper today, we produce, the world consumes 30 million tons of copper. By the year 2050, following this trajectory, we've got to produce 60 million tons of copper per year. Now, if you look at that, that means we got to grow and increase copper supply by 1 million tons per year. If you look at historical past 10 years, we've only increased 500,000 tons per year. Do we have the projects to add 1 million tons of copper per year? I don't think so. I think that's going to be extremely difficult. Take the same if you take nickel. Today we produce 2.5 million tons of nickel. We've got to grow to 9.2 million tons of nickel. We've got to produce an extra 250,000 tons of nickel per year. We've only been growing at about 100,000 tons of nickel. Same goes for cobalt.
But so if we're not able to actually meet the forecast, what does the industry do about it? Is there anything that they can do now to make sure that they grow at least at a pace which is adequate to keep up with some of the things that you're talking about?
Look, the mining industry is going to look at it intensely. We do see the Chinese who are focusing on this, and we see them trying to increase production in these various commodities. They were fast to see this, and they've been looking at this over the last 10 years at least. We've seen the Chinese have been increasing nickel production in Indonesia rampantly. We see nickel pig iron in Indonesia. I think today they're producing around about 800,000 tons. That comes from a very low level. So that there, the Chinese have seen it. We see it in the DRC. If we talk copper and cobalt, the Chinese are pushing copper and cobalt production in the DRC. And I think they're seeing it. Us, the mining industry, we're trying to grow and we're trying to increase projects. But as I said earlier, projects are in the more difficult regions, not the easy projects. Naturally, the world does the easy projects first, the difficult ones later. We're in that stage now in the difficult projects. We're going to countries with lack of infrastructure. We're going to new countries in a difficult political environment, not so easy. So I think the world's going to struggle to catch up. And that's where it's going to be the thing. What we're doing is we want to say we want to cut the supply of fossil fuels, and we must find the solution. And that's going to be you cutting it, but we don't have the solution yet. So you've got to try and get the two to balance. Can we do it? That's going to be the test.
Okay, whose job is it to do it? So is it private companies? Is it public companies? Is it governments? Is it someone else?
I think it's a mixture of everyone, yeah. I mean, I think it's got to be governments. If governments say we've got to have green energy and we've got to move towards green energy and we've got to get rid of fossil fuels, who's going to supply it? Can private industry do it? And private industry, of course, will push because we know that's going to create higher commodity prices. That's what we want, and we're going to try grow. But provided the demand is there, the demand will be there. But do we have the projects to do it? If we don't, then yes, like China, the government is pushing their companies to grow supply. We see it. We're going to see it in iron ore shortly. You have Guinea, where the Chinese are pushing, their companies to go produce more iron ore in Guinea. So it's going to be a push from governments to make sure that their private industries, their private companies are investing and growing the supply of these important commodities for the new green energy future. Electric vehicles, you're going to have to produce a lot more nickel, a lot more cobalt, a lot more copper. Can we get it if we are going to total electric vehicles? And as I said, by 2030, we're talking 55 million electric vehicles a year. That's a lot of copper, nickel, and cobalt we're going to have to produce. Can we get it forward? And it's going to be a concerted effort, I think, of both government and private industry.
Evan, you're considered one of the fiercest chief executives of this generation.
Really?
So as you're about to step down, what's been the biggest mistake in your career, apart from not giving enough TV interviews?
Look, we all make mistakes. There's certain investments that haven't turned out as we would have liked them, but that's life. We live with that. I think the most important thing that I've tried to do in the industry is to ensure that we don't oversupply the industry, and we try to do that here at Glencore. Reduce supply when we felt the market didn't need it. But yeah, we've had some problematic assets around the world, difficult regions we've operated in. Some didn't turn out great. So I think like any CEO, you got some bad projects didn't turn out. But overall, I think it turned out great. I think the company's done great. We have a great set of commodities, and we're very fortunate that we got the right set of commodities for exactly what we've been talking about. We got the commodities that feed this new green energy. We have cobalt, we have copper, we have nickel, we have zinc. These are the important commodities for the new energy future. So that's what we have pretty happy about here at Glencore.
That was our exclusive conversation with Ivan Glasenberg at the Qatar Economic Forum. After almost 40 years at the world's largest commodity traders, he's actually stepping down as chief executive at the end of June. Now, you don't want to miss more from the QEF. Today, we'll hear from names like Axel Weber, Larry Fink, and Hillary Clinton. Now, this is what the markets are doing. Now, a lot of the focus, of course, is on inflation and what we heard from the Fed, but there were no real surprises from Jay Powell yesterday. So stocks are pretty much steady. I have to say the focus will maybe shift to some of the inflation figures that we get in other parts of the world. Again, oil actually climbing above $73 a barrel after we had data signaling another decline in U.S. crude stockpiles, and that's added to a bullish outlook. Some of the other things we're watching, of course, is Bitcoin. Now, cryptocurrency is one of the biggest swings that we saw in the last 8 days. Bitcoin rebounding, rising currently past $30,000, and then commodities, including copper and iron ore, climbed. This was our big conversation with Ivan Glassenberg of Glencore. The currencies, for example, that, of course, the currencies of Australia and New Zealand retreated as the country stepped up coronavirus curb. So these idiosyncratic stories out there actually moving the markets in parts. Now, Mario Draghi is confident that part of the e-recovery fund will become permanent. The EU says leaders are expected to give final approval to Italy's aid package in about 4 weeks. Now, up next, we discuss this and more with the former Italian economic development minister and illimity chief executive. He's Corrado Passera. If you have any questions for him, IB plus TV Go. This is Bloomberg. Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. The Glencore chief executive, Ivan Glassenberg, speaks to us exclusively. He says China can't fight the law of supply and demand. Commodities continue to surge. And on the 5th anniversary of the Brexit vote, the UK and the EU are close to reaching a truce in their post-Brexit trade dispute. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first, let's get straight to the markets with our Danny Berger. Danny, a lot of the things are moving, but actually not really on the back of what Jay Powell was saying or doing.
Yeah, exactly. I mean, it was more sort of like as a tonic to markets that allowed them to continue to chart the path that they were before last week's FOMC meeting. Now, of course, while markets might be a little calm on the surface, I do want to take you what's happening underneath, because we have some notable movers, Pernod Ricard being one of them, the top mover in the stock 600, upgrading their earnings. Jeffrey's saying that they're having the best of both worlds. You have bars reopening, so people are going in there drinking, but that drink from home trend, while, you know, maybe not great for people's health, is continuing really strong. So that means their sales are really good. Bank of Ireland, the biggest loser today, down 6%. The Irish government starting to sell its stake. This was a bailout that nearly bankrupted the country. So they're trying to unwind this position that they've had on the balance sheet for some time. So those shares moving lower. And finally, Kering, there was a note out from HSBC this morning downgrading not just Kering, but really the entirety of the luxury space, saying that they like luxury, but it kind of looks as good as it's going to get. You know, people are certainly buying handbags, but these are just priced so richly that you shouldn't be adding now to your exposure.
Okay, that's interesting. I wonder whether you add to your drinks exposure. Drinking from home, Danny, that's not us at all. Morgan Stanley, the second Wall Street firm, now requiring a vaccine for employees to come back to the office.
Yeah, and this is really interesting. And Francine, I know that this is something that, you know, you and the rest of the surveillance team have been trying to figure out, like, what's the legality of this? We certainly know that there are places in New York, and that's where this is happening. Morgan Stanley's office is in New York. For example, different venues saying, okay, you either need a negative COVID test or a vaccine to come in, to go to concerts, that sort of thing. To really figure this out, I had to go back to December, where we had the Federal Equal Employment Opportunity Commission give a ruling. And so they're the ones who say, okay, you can't test employees for certain things. You can't really dig into certain medical histories. That's not allowed. But they basically said that, look, requiring a COVID vaccine doesn't have anything to do with medical history. Therefore, it's allowed. So it does seem like the trend is towards allowing this sort of thing to happen, Francine.
Yeah, I love this story. I mean, it's really important. We'll see if it catches up with more Wall Street banks. And I haven't really heard of a precedent in Italy or, France. So We'll see what happens there. Danny, thanks so much. Danny Berger there with all the main stock movers. Now, joining us is Corrado Passera. He's illimity chief executive and founder. Illimity is an Italian challenger bank that operates digitally. Now, the lender has just approved its strategic plan. It sees a net profit of between 60 to 70 million euros this year. Before founding illimity, Corrado was Italy's economic development minister between 2011 and 2013. Now, before that, he was also the chief executive of Italy's biggest bank, Intesa Sanpaolo. That was from 2007 and 2011. Corrado Passera. Welcome to Bloomberg. Thank you so much for joining us. I have a lot of questions on the economy in Italy. I have a lot of questions about illimity and, of course, some of the loans that you're seeing out there. But first of all, if we start with illimity, there are rumors that certain partners or certain other entities are interested in buying a stake in illimity. Can you give us a snapshot of actually what kind of conversations you're having?
Yes, and thank you for inviting me, Francine. Yes, technology will be the main competitive weapon in this in the next few years, and the partnerships we have decided to create with the ION group as to be put in this context. We are already very well ahead of the market, but we see such a disruptive further change around the corner that partnerships in technology are crucial. And we share the same view with Andrea Pignataro. In our business plan we presented yesterday, all the benefits coming from these partnership are not yet embedded in the plan.
I mean, is there an agreement that actually they won't exceed 10% of illimity?
No, we are at 10% is a good signal. We have aligned our interest. He's very interested in what we're doing. He's very interested in our platform because actually we created a platform from scratch that is unique. We are probably the only bank with a fully digital, fully modular, fully in cloud platform, very scalable, very capable to integrate innovation, and they decided to license it, to get it in licensing in order to sell it to the market. Mm-hmm. So we already have a very strong relationship, but the kind of synergies we expect in terms of sophisticated analytics, in terms of software development, are really huge.
Yeah. Corrado, give me a sense of how much M&A you're expecting actually amongst Italian banks. And I know, for example, so Eon is interested in Served. Would you be interested in taking parts of Served, you know, the asset management or something like that? Or are you expecting consolidation?
There is nothing specifically on the table, but for sure, a number of the IONS Group activity are very synergetic with our activity. And we will concentrate our M&A activity only in very selected kind of businesses. So we don't want to expand. We don't want to mix our activities with.
I think we've just lost Corrado. I don't know whether it's a temporary thing. This is a very 2021 problem sometimes when the video freezes. I think we could get Corrado back, but actually we'll try a little bit later. Corrado Passera there, the illimity chief executive and founder. Coming up, New York's mayoral primaries continues as Eric Adams leads the Democratic nomination. Precincts are still coming in. We'll have the latest next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get back to Corrado Passera, illimity chief executive and founder. Corrado, we were talking a little bit about the health of Italian banks. I want to get back to illimity, but actually, I guess the big elephant in the room is what will happen to Monte Paschi, and until that is fixed, is there a discount from investors on the Italian banking system? So what's the perfect solution for it, and what are you expecting the new UniCredit chief executive to do about it?
Obviously, I cannot give advice publicly to Andrea Orcel, but there are a number of possible solutions for Monte Paschi, and I'm sure that one of these solutions will be chosen. As UniCredit is not the only possible thing, and so I expect one route to be chosen by the end of the year.
Corrado, talk to me a little bit about how loans are doing in Italy. And, you know, how's it going at illimity? Do you feel like the pandemic, put you set back, but now you're going full steam ahead? Or what are the main pitfalls in the next 7 to 8 months?
No, I see a very strong will to recover, to restart. And I see also the demand for lending growing. So that is a very good sign, because especially in the SME world, there is a huge underserved market that is waiting for banks or other intermediaries to provide funds for growth, to provide lending for restructuring. We expect almost 40 billion worth of UTPs in the next few years. So there is a real will to start again. I mean, if we reached 10% ROE already this year and we want to double it by the end of the business plan, it's because lending to SMEs, especially second-tier SMEs with good potential, and restructuring SMEs is a crucial and very rapidly growing market.
Corrado, what would you say to people that are fully invested in Bitcoin?
I would say that as far as cryptocurrencies as a means of payment of system, I have no problem with blockchain. As long as they are made less energy consuming and more compliant with anti-money laundering regulation, it's okay with me. More innovation, more competition is okay. I have no problem with cryptocurrencies as far as we consider them virtual investment assets. If investors are properly informed, why not? I mean, they have to be free to invest also in tulip bulbs if they want. I see real problems if we want to transform cryptocurrencies in stable coins and in legal money. There is a matter of sovereignty. There is a matter of monetary policy and economic policy. And I'm sure that no serious country, no great power would leave its economic powers to a tech company or a permissionless mechanism. So in that respect, we have to be careful. The digital euro is another story.
We'll have to get you back on to talk about that, Corrado. Thank you so much, Corrado Passera, there, the illimity Chief Executive and founder. Now, New York's mayoral primaries continues as ex-police captain Eric Adams leads the Democratic nomination. Adams has about 31% of the vote, with most precincts already counted. Curtis Sliwa, founder of the Guardian Angels, has already secured the Republican ticket. Well, joining us now is Bloomberg's D.C. morning editor, Kailey Hunter. So good morning, Kathleen. What do we know so far?
Well, it's important to remember that in any New York City primary, really that is more significant even than the general election. So this Democratic primary is very significant. And the fact that Eric Adams is leading by such a pretty big margin, about 9 points right now, means that he could be close to clinching the nomination. Obviously, there's a lot of votes that still need to be counted. There might be more rounds of voting, but it's certainly a good sign for him.
All right, Kathleen, we'll follow, of course, this very closely. I know that also the fourth runner-up so far has actually left the race. Or Kathleen Hunter, there, Bloomberg's D.C. morning editor. Now let's get straight to the Bloomberg. First word news, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Hong Kong pro-democracy newspaper Apple Daily is to publish its last print edition tomorrow. The paper, owned by jailed media tycoon and activist Jimmy Lai, has faced intense recent pressure from the government. Authorities last week arrested the paper's 3 top editors as 500 police descended on the company's offices. Now, Sydney is to impose new restrictions, including compulsory mask wearing at indoor venues, as an outbreak of the Delta variant spreads in the region. The US, meanwhile, looks set to miss President Joe Biden's vaccination target. The White House says it will narrowly fail to get 70% of adults a first shot by the 4th of July holiday. Morgan Stanley has told employees they will need to be vaccinated against COVID-19 to enter its New York offices. CEO James Gorman says about 90% of returned staff have already had their shot. The firm says the goal is to help create a normal office environment without a need for face masks and physical distancing. The biggest new property on the famous Las Vegas Strip in more than a decade opens up tomorrow. Resorts World Las Vegas features 3,500 hotel rooms. Wait for it, a 5,000-seat theater with Celine Dion in residency and a 100,000-square-foot LED screen on the side of one of its towers. Construction at the site began all the way back in 2007, but was halted by the Great Recession. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, on the 5th anniversary of the Brexit vote, no deal has been reached in the so-called sausage wars. But officials on both sides are sounding increasingly optimistic that they will avert a trade war. The UK has asked the EU to extend a grace period on the sale of chilled meats and sausages in Northern Ireland from the rest of the UK. Well, joining us now with more is Bloomberg's Europe correspondent at large, Alberto Nardelli, who also breaks news on a really hourly basis. Alberto, so will the trade spat actually be averted? And good morning to you.
Good morning. I think it will be delayed fundamentally. Basically, the two sides are both sides are optimistic that a so-called grace period will be extended, and the EU side in particular is hopeful that extra time will be used by the UK to figure out how to implement the deal itself, because fundamentally that's really what this whole argument is still about. It's about implementing what Boris Johnson agreed to last year.
So what happens to the grace period beyond June?
So basically, the way the deal was structured, it already had a grace period built into it to allow businesses and local authorities and the government to prepare for certain checks, for example. And that period was then extended further back in December until June. It now runs out until June. And so, for example, what an agreement could look like is another 6-month extension until the end of the year. But what's really important in terms of avoiding a trade conflict in the longer term is that those 6 months are used to actually implement what's in the deal. And on that, there is still no agreement. So it's a truce, basically.
Yeah, with the truth. So what do we know is happening today? EU officials are, could we find out more today, or will it kind of be drip fed, I guess is how you say it, drip fed over the next couple of days?
Well, so what's happening today is that EU ambassadors are meeting, and so basically they will, in theory, sign off to an extended grace period. And once that green light is in place, what will happen is that the European Commission will talk to the UK, and the gist of that conversation is going to be, what are you going to do in those 6 months? But fundamentally, it is likely officials on both sides are very optimistic that within the next couple of days, there will be an agreement to extend that grace period.
Alberto, thank you so much. That was Bloomberg's Europe correspondent at large, Alberto Nardelli. Now, coming up, HSBC apologizes to customers in Hong Kong after a Twitter post sparked confusion over access to its services abroad. We'll get the latest live from Hong Kong. This is Bloomberg.
Gas is part of the solution for a longer-term transition.
We give a lot of emphasis in our strategy to natural gas, in particular LNG.
But certainly gas is going to play a really important role.
We need oil and gas to allocate part of the cash to greener energies, to renewables, and to make the transition real.
Carbon price is absolutely essential, but it's also absolutely insufficient.
Carbon pricing is important, but innovation as well, and policies are also very important.
Policy is going to play a very important role.
The majority of governments are taking this very seriously, but it has to be an integrated solution.
We also have to have policy and regulation that mandates things that are not going to be moved by just carbon pricing.
Some of the biggest names in the energy world discussing the transition to green and the role of gas and carbon prices. Now, the Qatar Ministry of Commerce and Industry Investment Promotion Agency, Qatar and Media City Qatar, are underwriters, as a disclaimer, of the Qatar Economic Forum powered by Bloomberg. Now, let's turn to Hong Kong. And HSBC has apologized to customers in Hong Kong after a Twitter post sparked confusion over access to its services abroad. Yesterday, the city's residents were spooked after the post shared a link to updated online and mobile banking terms on HSBC's website. It said customers may not be able to use online or mobile banking outside of Hong Kong from July 26. But HSBC also reassured customers that this was not the case. Let's get more with this with Bloomberg's Denise Wee, who joins us from Hong Kong. Denise, thank you so much for joining us. So what's exactly happening with HSBC and what spooked customers?
Hi. As you pointed out, I guess it all started with a tweet yesterday where someone highlighted amendments made to the terms and conditions to online banking, mentioning that, the customers are no longer able to access or may not be able to access such services overseas. And this has clearly spooked a lot of anxiety in the city. People are worried about moving money. Hong Kong is a hub, and it's important to be able to move money across borders. It's worth noting that HSBC has very quickly said it's business as usual. There are no changes. Customers can still go ahead and transfer money online banking overseas. But nonetheless, it's just a bit confusing to people. Hong Kong is such a big market for HSBC, and most people bank with HSBC. And it's also been a difficult time for Hong Kong with Apple Daily, with the tabloid being under attack. Sentiment is quite fragile at the moment.
So, Denise, will customers continue to be worried, or is there anything actually that the bank can do now to basically make sure that they're appeased?
I think the bank has very clearly said that, people don't have to worry, that they can make transfers as usual. But I think the fact that the document is still on the website, it just raises questions. People are still wondering why there were changes, why that's on the website. That's not super clear. I think the clearer things are, the better. There's been no super clear explanation. I think the bank has said they were combining terms and conditions and trying to make things easier for customers. But I think at the moment people are still sort of wondering why, if that's the case, why there were some changes on the website.
Yeah, thank you so much. Joining us today, Bloomberg's Denise Wee. Now, let's also actually have a look at what markets are doing. A lot of the focus is what we heard from Jay Powell. He didn't really give us any new indication from what we heard the previous day about inflation and the like. So I'm looking at Bitcoin maybe as a litmus test of exactly how much we'll see in the markets in terms of volatility. Now, for the moment, you can see stocks pretty much steady. Comments from the Federal Reserve, of course, eased some of the investor concerns that faster inflation would spur policy tightening. I'm looking at treasuries. They're down. Dollar gauge actually edging higher. Oil climbing above $73 a barrel. I don't know if we have oil for you, but it's a good one to look at today after data signaled another decline in U.S. crude stockpiles, and that really seemed to add to the bullish outlook. And finally, Bitcoin, 33,927,000. And now Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins us out of Berlin. Kailey Leinz out of New York. We'll talk New York. We'll talk the Fed. We'll, of course, talk a lot more about the big heavy hitters joining us from the Qatar Economic Forum. Today, we'll hear from the names like Tom Barrack, Axel Weber, Larry Fink, and Hillary Clinton. This is Bloomberg.
It's very hard to say what the timing of that will be. When will these bottlenecks disappear? Prices have come way down, but they're still pretty high.
Pure underlying demand supply fundamentals are putting commodity prices to the levels where they are.
The penetration of vaccines around the world is going to take time, and it has a meaningful impact on intercontinental traffic.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, June 23rd. Our top stories today. Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. Plus, Hong Kong starts the first trial under its new national security law, raising questions about the city's independence and future. And New York City election, Eric Adams leads the way for Democrats, but a final count may take weeks. Kailey, the markets for the moment seem pretty solid. I'm not really sure I'm seeing a real catalyst for today's price action, up or down.
Yeah, that's true, Francine. I mean, overall, I would say the markets yesterday seemed encouraged by the testimony from Fed Chairman Jerome Powell on Capitol Hill, reiterating again his thinking that inflation will be transitory and saying the Fed is in no rush at all to raise interest rates. Where that left us in the Asian session was a bit mixed. You did have Australian equities actually ending the day lower as Sydney takes steps to restrict movement amid the Delta variant concerns. You did have Chinese and Hong Kong equities higher, though, really led higher by big tech, which broadly was stronger in the Asia Pacific today. In foreign exchange, though, I wanted to note the Thai baht, which is weaker against the U.S. dollar by about 0.4%. That is after the central bank left rates unchanged, but did cut its growth forecast for the year. And meanwhile, in the G10 space, it is the Japanese yen that is the big underperformer, right now sitting at 110.91, which is its weakest against the U.S. dollar in about 3 months. Speaking of U.S. assets, as I said, stocks seemed encouraged by Powell yesterday. We did see stocks hitting an intraday record high, though we closed just off of those levels. And this morning, futures are clinging to positive territory, but only up about 2 points on S&P E-minis. In the bond market, we're inching higher on the 10-year yield, around 1.47%. So really not much changed from where we were last Wednesday prior to the Fed decision. We've really made a round trip despite all of the volatility we've seen in the bond market over the last week. In the commodity complex, I wanted to point to copper. Of course, had its worst week in more than a year last week, but now up for a third day in a row, positive every single day this week, up about 0.8% when it comes to futures right now. And of course, have to note Bitcoin, Matt, it dropped below 30,000, actually below 29,000 intraday yesterday. Today, though, we are right below that $34,000 level. So talk about a rebound. That intraday chart yesterday was something quite remarkable, Matt.
Yeah, I know Tom Keene was waiting for an entry point, so he, backed up the truck at 29,000 and just loaded it up, driving the price ever higher. Take a look at European markets here. We see a little bit of a mixed picture, although it's more to the downside now than it was 10 minutes ago. You see the Dax is one of the biggest losers, or Germany is one of the biggest losers there. France is also down, as is Portugal. Take a look at the Dax Index. I was just checking it out. 27 of the 30 DAX stocks are down. Only 3 are gainers, so off more than 0.5%. It was the biggest winner yesterday with kind of the reverse breadth. The euro is off a little bit against the dollar, even though the dollar is down against a basket of other currencies, and the pound gains against the greenback as well. So watch small moves in FX. And then Pernod Ricard boosting profit guidance, saying that it's going to have a 16% gain in profits because of, well, I guess we're drinking more at bars. And Pernod Ricard maybe is something you drink less at home and more when you're at the Carlisle, Francine.
Not if you're French, Matt. I mean, Pernod Ricard all the way. It's interesting, actually. I was looking at some of the breakdowns, Matt, of where people drink the most at home or where they drunk the most at home in the pandemic. And it seems like it's a really cultural event. So the Brits drunk more at home, for example, than the French that feel inappropriate to drink at home unless it's wine.
The Brits drink more than anyone anyway, at home or abroad. The Brits drink more than anyone.
And you can see
right?
it in revenue.
Am I wrong
so
about that?
Not, No, actually, you see it in the revenue, so it's not even a judgment. I mean, we can't generalize, but it is in the revenue of a lot of these companies. Now, look at what's ahead today. At 8:30 a.m. Eastern Time, we'll get a rate decision from the Czech Republic. The country's central bank is expected to make its first hike since before the pandemic to tackle inflation. Lots more Fed speakers today as well. At 9 a.m. Eastern Time, Governor Michelle Bowman addresses a conference on economic resilience. We'll also hear from Atlanta's Raphael Bostic and Boston's Eric Rosengren later on. 9:40 a.m. New York time, we'll have June PMI readings from the U.S. Then their new home sales data for May shortly after. Now, New Yorkers took to the polls to cast their votes in the city's first-ranked choice election. At the end of the first day of counting, former New York Police Captain Eric Adams came away with a decisive lead. The final results of the Democratic primary, though, could take weeks to decide. Our Bloomberg surveillance anchor Tom Keene joins us with the very latest. Tom, if you put this into context, so is it a truth that whoever wins the Democratic primary then becomes New York mayor.
Oh, yeah, there's no question about that. I think you've got the right phrase, Francine. Context is what is necessary here. There's lots of discussion about the horse race and ranked choice voting and such, and, we can redux the math on that, but Mr. Adams clearly is ahead of two other good candidates, and there's about 42 other candidates behind, with Mr. Yang already dropping out. What is so important here is the shift for this great metropolis. You mentioned, is it an assured win? Yes, it is. On the city council, there are, I believe, 3 Republicans, 2 from Staten Island, and 1 way over in Queens, sort of in the land of JFK and north of JFK. But what's so important here, Francine, is the fabric of the city. This is a 2-year cycle because of the census of 2020. Instead of 4 years, it's 2, and then they do 2 again with the reapportionment coming up. And what's important is not just the mayor race. It's about the comptroller, which clearly seems like it's gone more liberal, more progressive. It's about the attorney general, which is heatedly debated, particularly with Mr. Vance retiring and all the politics around the politics and business of Mr. Trump, the former president. But it's also, Francine, about the 51 council seats that make up these 5 boroughs.
Tom, and of course, in addition to the intercity dynamics, there is also the relationship between the city and the state. If we do end up with a Mayor Adams, what is his relationship with Governor Cuomo likely to look like?
Easy answer, going back to my childhood, Kailey, fractious. It has always been fractious. I don't see any change in that whatsoever. What is interesting about the state is the dynamics of the 2 legislative branches in Albany between Republican and Democrat. If the Democrats hold a majority up there, which has been a rare occurrence happening now, that gives more power, more organization, more cohesiveness to get something done between New York City and up the Hudson River to Albany.
All right, Tom, thanks very much for joining us. Tom Keene, their co-anchor of Bloomberg Surveillance, talking to us about the New York City mayoral primaries. Hong Kong has started its first trial under Beijing security law that was imposed last year. A 24-year-old man has pleaded not guilty to charges of incitement to secession and engaging in terrorist activities. Joining us now from Hong Kong for more is Stephen Engel, Bloomberg's chief North Asia television correspondent. So what do we know about this security law, which, I think one of the most interesting facts about this morning is that HSBC publicly supports this law.
Well, yeah, you kind of have to go along with the tide in that sense. After a year now of being under the national security law here, it has been a big blanket hanging over this city. It's been a turbulent year since June 30th of last year when that law was imposed. We've since then had a total revamp of the electoral process here. Many of the pro-democracy former lawmakers have been arrested. The Apple Daily, I'll get to that in just a second, that paper effectively has been forced to shut down. It was a big proponent of democracy and tackling corruption of officials. We've had the coronavirus. You've heard of that. And now we've had this first trial, and there's really no legal precedence of this first trial under the national security law. So it's going to be closely watched to see how this panel of 3 judges who are picked by the chief executive, no jury, I might add, on how they're going to handle potential conflicts between the existing basic law, that's the mini constitution, and the national security law. And there are conflicts and could create a legal roadmap for prosecutors for other cases, including Jimmy Lai, who stands, accused of national security offenses as well.
Stephen, thank you so much. Stephen Engel there from Hong Kong. Now, it's 5 years since the Brexit referendum in the UK. Now, British and EU officials, we understand, are increasingly optimistic that they will avert a trade war. They believe the 2 sides will actually strike a truce in the dispute over checks on goods moving into Northern Ireland. Let's get more from Bloomberg Senior Executive Editor David Merritt. David, not as, I guess, embattled as before these negotiations.
Yes, that's right. The key word here is truce, not actually a resolution, of course. This big question about how to keep the border in Ireland open. The Northern Ireland Protocol was supposed to solve that. It's caused more problems, of course, on the British side in its implementation. And we saw lots of theatrics about this at the G7, threats to unilaterally pull out of that accord, trade tariffs from the European side. What we understand now is that they have agreed to extend the deadline for these things to be implemented, which was supposed to be the end of this month. That's going to diffuse some tensions, but it doesn't solve the underlying problem, which is that the Europeans don't want any sort of compromise to their single market, nor do the British. So yet again, this question of Northern Ireland bedeviling the Brexit situation. Remember, it undid Theresa May's premiership. Boris Johnson will be very keen for it not to undo his. But, you know, seasoned Brexit watchers like you and I, Francine, you know, we're familiar with this, aren't we? Kicking the can down the road. That's what we're seeing. No agreement yet, but that's what we expect to see. But at some point in the future, they need to be some sort of compromise in order to come up with a permanent solution for Northern Ireland.
All right, Bloomberg Senior Executive Editor David Merritt, thank you so much. Time now for a quick check on some stocks moving in pre-market trading here in the U.S. And of course, I have to begin with one of the latest meme stocks, Torchlight Energy. This is a stock up 900% year to date. And the company yesterday deciding to cash in on that rally, selling $100 million worth of shares. On that news, the stock fell 29% yesterday and once again is lower by about 11% in pre-market trading. One stock moving to the upside, though, is KB Homes, the, of course, home builder. It will report results after the bell today, and investors buying the shares ahead of that. It's up about 5.4% before the bell this morning. And another stock moving to the upside is Alzheimer's Neuro, a biopharma company, just made its public debut last week. It IPO'd at $5 a share this morning, though, at $9.44, up about 12% in early hours. Francine.
Thank you so much, Kailey. A lot going on. Coming up next, we speak stocks, we talk inflation, maybe Bitcoin with Marija Veitmane, State Street Bank Senior Multi-Asset Strategist. And later on, Simon French, Panmure Gordon Chief Economist. We're also looking at Pernod Ricard. Matt Miller has some great stats, actually, on the country that drinks the most at home. So we'll talk about that as well. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, last week, when the Fed took a slightly hawkish turn, everything made sense for a brief moment, and investors sold off the 10-year treasuries that they were holding. That pushed the yield up almost to 1.6%. But in the following days, they started buying those treasuries again, and the yield came all the way down to 135. Now that we've heard a couple of Fed speakers, and yesterday we heard from Jerome Powell, the man himself, that he sees inflation as higher than maybe he had expected, but still believes it's transitory. Rates have gone right back to where they were before the Fed meeting on Wednesday. Joining us now is Marija Veitmane, Senior Multi-Asset Strategist at State Street. Marija, what are we to make of the Fed's hawkish turn and its lack of effect on market rates?
I think the key point is don't fight the Fed. So if Fed is telling us that they're not going to raise rates substantially anytime soon, and I mean, I don't take 50 basis points potential hikes in 2 years' time as any kind of major change in direction. So if Fed is telling us they're staying pat for a long time and economies are reopening, growth is being strong, earnings are recovering, then there is no reason not to be optimistic on risk trades.
But Marija, the concern is that I think the Fed, actually surprised the markets last week. So you don't fight the Fed, but what are they actually, saying? And what if they're talking down inflation and it's there? Like, there was a big repricing last week. Do you think it was the markets misunderstanding or the Fed miscommunicating before?
I think it's potentially reading too much into what Fed was saying. I mean, dots are dots, and we know that, what Fed is subsequently was trying to tell us that, okay, we see economy being a bit stronger and we're watching it, but it still seemed transitory to them. That talk about labor market. So I think market maybe read a little bit too much into the kind of movement in dots. And Fed is obviously a bit more active right now, but we're still sitting at a very, very accommodative end of monetary policy. And the changes in policy that Fed is talking about are still exceptionally gradual. And yes, they moved dots a little bit bit forward, but what's interesting, the overall number, kind of the R star, the final dot, that has not moved. So to us, the slight shift in Fed shouldn't really kind of damage growth outlook, which is very, very strong right now.
Well, Marija, this was a market that was looking for a catalyst. We have been range bound for some time. If it's not going to be the Fed, what's it going to be?
Yeah, no, I think that's actually a really, really good point. I think market is looking for something to move. And what we had is, and actually what is interesting right now, I'm looking at Wix index, and it came down to kind of this year's, not far off to the lowest point in the year. So yes, there is very little volatility, there's little happening. And I think in that world, reflation is kind of the path of least resistance. It's almost your default rate. And we potentially going back to carry trades, we're going to equity kind of melting up higher. We think kind of reflation stocks doing better because Fed doesn't seem to have upset that apple cart.
Is there an inflation hedge that you like, Marija? I often think about trying to find stocks that can easily pass cost increases through, and that being, for example, a good hedge.
I mean, that might sound a bit controversial, but I really, really like technology stocks as a hedge. To me, that's on a good risk-on day when we're thinking about growth, when we're thinking inflation, they maybe play a second fiddle. On a day like Friday, when we had a lot of concerns about growth, with a lot of concern about what's going to happen, how quickly Fed will move, technology stocks had an upper hand. And it might not necessarily be like your inflation hedge, but that's a very, very good market hedge when we worry about sell-off, we worry about kind of risk-off. That, I mean, we know the technology stocks, they shown it last year, they can make money pretty much in any market environment, and they're in amazing position of stable, fast-growing earnings. That's very, very rare to find in equity market, and I mean, that's proving to be a very good trade to me.
Marija, what do you do with commodities right now? What do they tell us about the rest of the asset markets?
Yeah, commodities are really interesting, and I think it's very interesting to see this kind of bifurcation with oil price continue to go stronger and kind of industrial metals suffering a little bit. I suspect some of kind of pullback in metals probably to do with China and trying to kind of control commodity market and get rid of kind of maybe some speculative froth in there. But in general, I think, as I said, we like reflation trade. We think that growth is being continued to be strong. So you have to stay with commodities. I think there is a little bit of selectivity within the commodity space, but overall we're quite positive.
All right, Marija Veitmane, sticking with the reflation trade, thank you so much for joining us. Of course, she is Senior Multi-Asset Strategist at State Street. And coming up later on The Open, SEC Chair Gary Gensler joins Bloomberg for his first conversation in his new role. That's at 9 a.m. in New York, 2 p.m. in London. Don't want to miss it. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg. First for news, and the wait time for semiconductors has hit a record 18 weeks. Now, research by Susquehanna Financial Group shows that up 7 days from the previous month. The gap is already at the most since the firm began tracking data in 2017 and 4 weeks longer than the previous week in 2018. Now, longer lead times for power management chips, semiconductors that regulate the flow of electricity, are a primary reason for the overall increase. Also, HSBC Holdings has apologized to customers in Hong Kong after an update to its online and mobile banking terms triggered fears over overseas access to its services in the financial hub. The apology from Hong Kong's biggest bank underscores growing concerns in the city over pressures on businesses as China tightens its grip. Well, evidence includes a recent order for 7 lenders to stop dealing with the pro-democracy paper, Apple Daily. And Morgan Stanley has told employees they'll need to be vaccinated against COVID-19 to enter its New York offices. The chief executive, James Gorman, says about 90% of returned staff have already had their shots. Well, the firm says the goal is to help create a normal office environment without a need for face mask and physical distancing. And we have looked into the legal implications, Matt and Kailey, and one of the things is that actually employers cannot look at your past, but this is not whether you're healthy or not. It's a vaccination, so they're allowed to do it.
Yeah, that would make sense. I mean, you want your people to be able to move around freely. You don't want them to have to wear masks or have plexiglass dividers on their cubicles. That would, I think, drastically reduce your pleasure in coming to work. So you require a vaccination, then they can't get sick and can't get other people sick.
Well, and then it removes the need to operate on the honor system, because that's the whole issue around people who are vaccinated no longer being told they need to wear masks. How do you know if they're not vaccinated? As an employer, that's definitely a concern, Francine.
Paperwork. I'm so European. Paperwork. Coming up next, Simon French for Panmure Gordon. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Matt, we saw the Fed yesterday. It was pretty much expected, so it's not really moving the market so much. So we kind of wait for a catalyst.
Yeah, absolutely. I mean, Powell spoke, but he said pretty much what he said last Wednesday and kind of what he's been saying all along. Although he did say inflation is more than the Fed had anticipated, and it's possible that it's more persistent than they expect. So it'll be interesting. Obviously, markets didn't price that in because that's not what markets do these days with the Fed. They bought stocks and bought bonds instead and sold off the dollar.
Kailey, how's it playing out in the markets?
Well, it's interesting, Francine. Actually, the older the session grows, both in Europe and in the future session here in the U.S., the weaker it seems to be becoming. Right now, when you take a look at the stock 600 over in Europe, it is the most down that it has been at any point in the session thus far. Right now, the stock 600 off about 0.4%. Here in the U.S., futures briefly went to unchanged. We are just up now a little more than a point on S&P E-mini, so it doesn't look like it will be the firmest open in about 4 hours' time. Matt was talking about the fact that investors actually bought bonds yesterday. We are seeing the 10-year yield ticking up just a basis point today, 147, which effectively is where we were a week ago on Wednesday before the Fed decision. So it's like nothing has changed at all. And then, of course, I have to talk about Bitcoin. It dropped below 30,000 yesterday, then had a really incredible rebound to end the day, basically unchanged and climbing once again today, right around that $34,000 level. Of course, with Bitcoin moving higher, that means stocks tied to cryptocurrencies are also moving higher in pre-market trading. You have Riot Blockchain, Marathon Digital, each up around 2%. To the downside, though, Torchlight Energy, a small Texas oil player, one of the latest meme stocks that had been bid up dramatically in recent weeks. The company capitalizing on that, selling $100 million worth of shares. As a result, the stock fell 29% yesterday and is lower by another 9% in early hours this morning. And BioXcel, another stock with a $100 million share sale, that stock is down about 8%. Investors not liking that so much, Francine.
Yeah, we'll have a more in-depth look at some of these big stock movers. Now, Jay Powell led a slew of his colleagues in saying that while a debate on tapering may be on the cards, the Fed is nowhere near raising rates. Now, he testified before a House committee yesterday.
We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. A pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy. I will say that these effects have been larger than we expected, and they may turn out to be more persistent than we've expected. But the incoming data are very much consistent with the view that these are factors that will wane over time.
Well, joining us now, Simon French, Chief Economist at Panmure Gordon. Simon, I really also want to ask you about the UK economy and Brexit, but what we heard from the Fed, it's pretty much the same message, is that, yes, it's transitory. Look, don't expect any harsh moves from the Fed. Was there a misunderstanding in the markets last week, or were they right to reprice?
I think there was a fundamental misunderstanding. I don't think there was any expectation that the Fed would change its communications message before August. Our own internal view is that substantial further progress, which is the metric for starting to talk about tapering the $120 billion worth of asset purchases, will require about a cumulative 2 million jobs added over the course of the June and July payrolls data out of the US. Of course, it's not only one metric, but I think it's our key headline metric to see at least a comma shift at the Jackson Hole meeting at the end of August. If we don't get those jobs numbers, then I think an even more dovish tilt will be necessary because markets will look for an update on what that substantial further progress actually looks like.
Simon, what does that mean for Treasuries?
Well, we still see yields moving higher. What's really quite interesting is that, it's an extraordinary outlier to see CPI inflation north of 5%, but Treasuries, at least at the long end, low and indeed moving lower. We have a end-of-year target for 2.5% for the 10-year. And that may seem quite paradoxical because we expect inflation to be transitory and the CPI and the PCE print to come down. But I do think there's an awful lot of mispricing going on at the moment, just in terms of the sort of historic relationship you see between inflation and yields. And I expect that'll normalize, perhaps at the same time as those transitory effects that Jay Powell was talking about will start to leave the index.
In terms of the $120 billion a month, Simon, does that make sense, and for how long?
Well, I think there is enough strength in the US housing market, indeed globally. You look at the G20 housing markets, they've all been fueled by this shift in utility function of a lot of us have spent an awful lot more time than we'd planned or even wanted in our houses in the last 16 months. That's fueling demand in that market. And therefore, do I really think there's a justification for the mortgage-backed securities element of that $120 billion to be continued at this stage? No, I don't. But having now guided markets to have a threshold level in terms of substantial further progress, it would be a strange thing for that $120 billion to be tapered immediately. There needs to be a journey that markets are taken on to avoid, volatility, the type of volatility which start to tighten financial conditions somewhat faster than the Federal Reserve and indeed the Treasury are comfortable with.
Are you more concerned, Simon, with the debt built up by, talking fiscal here, not the Fed, by the stimulus needed during the pandemic, or are you concerned about the drop-off in fiscal that it looks like is ahead? We've gone from, $5 trillion in stimulus to thinking about $500 billion in infrastructure.
Honestly, Matt, I don't really worry about either of them. Maybe that's massively complacent of me. But from the perspective of the amount of stimulus built up to support the pandemic, when you had a forced shutdown of the economy, what is the fiscal authority, the insurer of last resort for household and business income, supposed to do? It's supposed to leverage its balance sheet. It did the right thing. Now, will the drop-off Does the drop-off cause problems if private sector demand doesn't come back in and take its place? Well, of course it does. But all the indicators we see in terms of pent-up demand, the potential for the US consumer, the global consumer, to go out and spend a lot of not just their deferred consumption, but also in the case of the US consumer, their additional disposable income. I think all the signs are the private sector is ready to take the baton back off the public sector. So honestly, I don't worry about either of those two.
Simon, we have the BOE decision coming up tomorrow. How has Jay Powell and the Fed set the stage for Andrew Bailey and co?
Great question, because I think there's some big mispricing in the marketplace that just assumes that the Federal Reserve is going to go first with both its tapering and its increase in the Fed funds rate. How has Jay Powell set the scene? Well, he set the scene rhetorically for the MPC to continue talking about supporting financial conditions in the UK, transitory inflation, largely the same playbook. But where I think the mispricing is historically, if you go back to the Second World War, you see the Federal Reserve move first, and the Bank of England about a 9-month lag on average. I think tapering and the first rate increase comes first in the UK rather than the US in this cycle, not least because the headroom under the flexible average inflation target that's given to the Federal Reserve there's nothing like the same headroom when you track UK price inflation, which is averaged bang on 2% over the last 20 years. There's much less for them to eat into, and therefore I expect tapering to be announced potentially as early as the August MPC, and then a rate increase towards the back end of next year. This is very much setting up the Bank of England to move first after the Federal Reserve. Before the Federal Reserve.
And all due respect to Mr. Bailey, but will their real newsmaker out of the BOE tomorrow potentially be Haldane?
Well, look, you're absolutely right. I mean, Andrew Haldane is the outlier. He's the arch hawk on that committee. He leaves at the end of June, so it will be his last meeting. Will he move further than the position he took at the last MPC meeting, which was to taper asset purchases? No, I think his vote will remain the same. What will be interesting is whether that move brings other more moderate, at least historically moderate members of the MPC with him. I think there's a good chance that we might not see a vote shift, but we see in the minutes, we see some indication the Bank of England is readying markets for perhaps not purchasing the last 30, 40 billion pounds worth of gilts that are scheduled for Q4, and actually may end their asset purchase program rather than the end of December, the end of September. And that would be a Haldane triggered move, I think, but it would be a welcome move in my opinion.
Great, thanks so much. Simon French, their chief economist at Panmure Gordon. I know we'll all be watching the Bank of England very closely. Now, in the meantime, German Foreign Minister Heiko Maas and the visiting U.S. Secretary of State Antony Blinken are giving a joint press conference in Berlin. I know our Matt Miller has been all over this. We also found out a little bit earlier on that Mr. Blinken could actually meet with a Chinese diplomatic envoy as soon as that next week. That will be a very interesting conversation, especially after we heard Justin Trudeau being quite tough on China. Matt, I imagine this is causing quite a lot of commotion in Germany because the Secretary of State has arrived in Berlin.
Well, there hasn't been that much commotion. We do see, of course, right outside our offices, lines of police cars and limousines because most of the big diplomats stay right across the street and the consulate is directly behind me. So in terms of what we see of, dislocations here in Berlin, there hasn't been much. And keep in mind, the Germans are much happier with this administration than they were with the last. So they're much more hopeful in terms of working together. And, of course, this German administration is about to be done in September and will then look forward to new people filling these seats. So I think you're going to find them a lot more congenial than they would be under many other circumstances.
We'll follow, of course, that press conference. Coming up, also, the former New York policy captain Eric Adams leading after the first round of counting in the Democratic mayoral primary. So we'll discuss the mayoral race next. This is Bloomberg.
We know there's going to be 2s and 3s and 4s. We know that. But there's something else we know.
Take your time.
That New York City said our first choice is Eric Adams.
That was former New York Police Captain Eric Adams, who is leading after the first round of counting in the Democratic mayoral primary here in New York City. But the final vote may be weeks away. Marty Schenker, Bloomberg editor-at-large, joining us now. Marty, it is not over yet. There are still several more subsequent vote counts that need to happen because of the ranked choice ballot. And of course, he still would need to win the general election in November. But what does his early lead tell you about the priorities of the New York City electorate?
Well, it tells me that the quality of life issues that dominate the discussions in New York City are what made it possible for Eric Adams to come in first place. And certainly I'd rather be in Eric Adams' position than any other position in this race. So he has a pretty good chance of being the next mayor.
Marty, I mean, what's interesting is, of course, this crucial advantage he has with the focus on law enforcement. Does it give us an indication of other parts of America and the way they will vote with this focus?
You know, I don't know that you can extrapolate what happens in New York City to any place else. It is, as you know, a very unique place. The conventional wisdom is that New York is a very liberal town. But when it comes to politics, it seems that the issues of quality of life, of crime, of making the city work are the things that really matter to New Yorkers.
Marty, last year in a MotoGP, a motorcycle racing championship, Joan Mir didn't win almost any races. He only had one win, but he got second and third at almost every race, and as a result, he was the champion for the year. I was sure that this would happen to Andrew Yang. How did he come in fourth after polling so well?
Well, you know, I do think that he made some really strategic errors in this race. Questions arose about how well he knew New York City when he named Times Square subway station as his favorite subway station. That a lot of New Yorkers questioned whether he'd ever even been in that station. So I think he just whether his authenticity was questioned, and it cost him in the polls.
Marty, I want to expand beyond New York City politics, talk about broader domestic politics here in the U.S. Yesterday, the For the People Act, the voting rights bill, was blocked in the Senate. Party line vote 50-50, once again putting the issue of the filibuster at the forefront. Do you think yesterday's events give fuel to the fire for those who want to get rid of the filibuster?
Well, it'll certainly energize the progressives in the Democratic wing who want Joe Biden and the Democratic leadership to take the reins while they still have power and eliminate the filibuster. But Joe Manchin and Kristen Sinema have said no way. And as long as they are dead set against ending the filibuster, the voting rights bill is dead. And there's really no way of Democrats to take that back to the Congress.
Marty, thank you so much. And then we could spend the next hour also talking about U.S.-China never dull. Marty Schenker, there, our editor-at-large. Now, coming up, part of our interview, the Glencore chief executive, Ivan Glasenberg, from the Qatar Economic Forum, powered by Bloomberg. That's coming up next. We talk commodities, supercycle, oil and gas. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, Chinese efforts to cool commodity markets may be short-lived. That's the view from the Glencore chief executive, Ivan Glasenberg. We spoke at the Qatar Economic Forum, powered by Bloomberg.
You got the big infrastructure spend, which is occurring in China at the moment. It started early when the COVID crisis hit and the Chinese got out of the problems. They started spending on infrastructure and pushing the infrastructure fiscal spending, and that started the rise of commodity prices. You also had a few disruptions around the world in certain commodities because of the COVID, and that tightened up supply, and that allowed the commodities to push up to where they are today. You also have infrastructure in picking up in various parts of the world, but we do see it coming in the United States when eventually they pass the infrastructure bill, and the speculation of commodity prices picking up on the back of that will start driving them up. So I think the pure underlying demand-supply fundamentals are putting commodity prices to the levels where they are. I know recently the Chinese have tried to push it down to bring it back to lower levels. I think that's a short-term game because the underlying fundamentals will keep it at these levels.
So how much can they actually try and talk it down, China?
Well, they're not trying to talk it down. They're taking some material from the strategic stockpiles and putting that in the market. Now, how big the stockpiles are, we don't know exactly, but they can do it for a while. But eventually, they got to restock the strategic stockpile. They can't keep it at these low levels, so they'll come back into the market. So I think it's a short-term phase.
Short-term, like a couple of months? Are we actually at the start of some kind of super cycle, but a super cycle that's very different from last time around?
Yeah, well, what was long? We've had two sort of super cycles, you can say. In 2002, we had the Chinese coming into the market where you had the big push on commodities. The world wasn't ready for that amount of demand, and you had commodity prices rise considerably. Then the world sort of caught up a bit, but then you had the 2008 financial crisis, pushed down commodity prices. Chinese came in big with infrastructure spend in 2009. That kept it strong. Unfortunately, then the mining industry got the usual situation where they started producing too much, increased production, opened up new mines, and started producing more. That pushed it down, and you had the 2015 commodity price drop. Now it started looking better until COVID. COVID pushed it down, as we said, and now we got the rise with the infrastructure spending occurring in many places around the world. Is this a super cycle? I don't know if you want to call it a super cycle, but I do believe commodity prices will stay strong for a long while longer. And I think when the American infrastructure plan comes into fruition and the actual shovel-ready, how many shovel-ready projects they have, I don't know, but let's assume it will take them 18 months to get going. You will push a commodity price will stay high for a long time. You will have both parts of the world pushing infrastructure. You'll have the Chinese continuing with their infrastructure plan. They still got to urbanize a few 100 million people, and you have United States kicking in, upgrading their infrastructure. Demand for commodities will stay for a long time. Can supply meet that demand? Well, that's another debate. How quick the mining industry can increase and bring new projects on, but that's a lengthy debate. New projects, I think, are going to take longer this time around. There aren't many projects around the world. We've developed most of the easy projects. We now got to go into the more difficult regions of the world where there isn't infrastructure, harder political environment, and I think the mining industry is not ready to add massive new tons to the market.
That was the Glencore Chief Executive, Ivan Glassenberg. Now you can catch more conversations from the Qatar Economic Forum throughout the day, including interviews with Larry Fink of BlackRock and Hillary Clinton. Now I look at what else we're watching today, Kailey.
I'm watching Capitol Hill and big tech antitrust legislation that will be taken up by the House Judiciary Committee. There's 6 bills, all of them taking different tacks here. But really, the broad theme is trying to rein in the dominance of some of these platforms and strengthen antitrust enforcement. It's not really for certain that these proposals actually become law as they are written up, but still something to watch, Matt.
Yeah, I'll be keeping an eye on Washington as well to see if they get any further on infrastructure. But really, I am interested in what's going on at the Hong Kong Shanghai Banking Corporation. Now, they tweeted out new terms for their customers saying they may not be able to use online or mobile banking outside of Hong Kong. That caused an uproar. They later apologized and tweeted they don't plan on changing any services, but they didn't rescind those terms. So those terms still stand. And you've got to remember that Hong Kong has previously frozen client funds on government orders and has publicly endorsed the controversial China security law that's been used to imprison pro-democracy activists. Francine?
I'm looking at Brexit for a number of reasons. First of all, it's a 5-year anniversary of the Brexit vote. Second of all, we understand that there could be, or that we are closer to a possible truce between the UK and the EU. This is on the controversial sausages wars, whether you can get cold meat into Northern Ireland or not. But also today, there's a new 50-pound coin that, actually a note that's entering into circulation. This is with Alan Turing, the codebreaker mathematician. That note launched today, the final banknote to switch from paper to plastic.